Welcome back to the Real Estate 401k show. I'm trying to slow the intro down. I was going back and looking at previous podcasts, and I'm just all giddy and excited when I do these introductions. So I'm trying
then you panic.
I'm trying to slow down here.
Yeah.
But I'm Mike Weinstein alongside Justin Frederick and Ryan Gerdes. So Barbara Corcoran from Shark Tank, a real estate mogul in her own right, has made headlines and making the news. Before we get into it, you guys Shark Tank fans, and who's your favorite shark?
You know, I watched it quite a bit when it first came out, and I don't know, just kind of lost its luster for me. I still love the concept, but Mark Cuban was always my guy, and I know Justin, it's your guy too. But I think he's the most charismatic, and I think that he probably is the one that's a little bit more. Like, I know Mr. Wonderful is more of like the shark, kind of mentality on it, but I think deep down, Mark Cuban could not only out hustle, but I'll bet you he could out negotiate Mr. Wonderful, is what I think. Like in not just on television, but I'm talking like
in real life
when you're sitting at a negotiation table.
Who would you fear the most?
I wouldn't want to sit across the table from Mark Cuban. I think that he would eat my lunch for me.
I know Mr. Wonderful is Mr. Wonderful, and it's probably very, too popular to say he's my favorite, but I just love his arrogance. I just freaking love how he just walks in the room and he doesn't care. I love arrogant people. I love hanging out with arrogant people. That's why Justin's on the podcast all the time.
Far from it.
Well, if you do...
let Justin answer.
Well, you answered for him.
But he didn't say why.
Yeah. And you know what? I don't watch TV. So, unless there's like a sporting event, I really avoid watching TV. Just because I have so much other stuff to do. But I'm a lot like you, Ryan. I watched a bunch of episodes when it first came out. And I really enjoy Mark Cuban. I just I feel like he's hustled in life, and I've definitely loved how he's given some of those individual shots that the other investors weren't into. He's brought up a bunch of successful people out of there. Very cool. Very cool to watch that.
We had to stop watching it because every time we would watch it, next thing I know, we would have more Amazon boxes. My wife just is like, she's that person, dude. That's why I'm glad we don't watch the Home Shopping Network. We would be broke. All right. Well, anyways, we have been saying it for, I'm not even going to say months, but, well over a year. We have been warning people, whether it's our clients, our sphere of influence, but more importantly, our followers and our guests on the podcast, of saying one of the worst things that you can do is wait for interest rates to drop. The market is going to go crazy. The higher the interest rate, the better the deal is. And well, Barbara Corcoran, apparently she agrees. So according to her, the 30-year mortgage rate is currently swinging closer to the 7% mark and keeping plenty of buyers at bay. According to Barbara, if rates go down just another percentage point, which is what she's hoping for, prices are going to go through the roof because everybody is going to come out and buy.
Yeah, well, and then if you look at the predictions of the Mortgage Bankers Association, they're expecting rates to hit 6.1% by the end of 2024. Also, you have Fannie Mae coming out. They're expecting 5.9 by the end of 2024. And this is kind of backed by what Powell's been saying, too. We're expecting to drop rates 3 times this year. Let's hope we stay on that track. But that will also impact mortgage rates. And as that happens, you're going to see the demand go even higher. And they were expecting demand to back down a little bit here.
Ryan, we always talk about, the interest rate is just one of the numbers. You got to take a look at all the numbers. My message for everybody that is listening to this and waiting for interest rates to drop before they get into the game is to go find a mirror, look themselves in the mirror and ask them this question. Do you like money?
Saw that one coming. I think that there's a little bit even more magic behind it than what's going on here. I'm not going to speak about all the markets out there, but I know that the consumers have spoken here. And well, if you watch the show and you talk to us personally, or if you text into the show, then you know that we're talking all about the numbers. You know that we're talking about the entire investment approach on it. And the consumers have spoken. They still have a huge appetite, even though the market is in the, what's it, 6.75, somewhere right around there, just kind of depending on credit score. That's more of a primary number. On the investment side, you need to basically, add one to it, right? So 7.75, somewhere right around there on an investor rate. So that being said, consumers are still consuming on the investment side. And they're okay with putting a little bit more cash down to make it so that their monthly exposure isn't as high. So that being said, they're okay with it not breaking even on a passive income side, because we are seeing such huge upside, not only on the tax advantages and the four, all four pillars of how we make money in real estate. They're still saying, you know what, I understand it's not 2020. I understand that I'm not moving into a position where I can put minimum down and still have positive cash flow of $300, $400, $500 a month. I'm still happy to do it because of everything that this is offering. And I think that once it hits that 5.5, not only are we still going to have the investment appetite there, now all of a sudden we're going to have the primary consumer appetite. And once you compound that, that's when it's going to really start to snowball and see that, see those effects. Because we've been saying since this time last year,
2 years ago.
Yeah,
we've been talking about this for a while.
Once we get back, and once there's a 5 in front of that interest rate, get ready. So if you're being savvy and you want to take advantage of a more softened market where you can potentially get a better deal, you do it now, and then you build into the fact that you're going to refinance later, and you just kind of gotta eat it a little bit right now just in order to get through it. So that this doesn't shock me, and I do like that it's somebody that's a little bit more renowned than us, that has
and smarter, and more attractive than us, and everything.
Fair, but she's coming out and saying it too, and so that's kind of exciting, because it can, we've all seen self-proclaimed prophecies. So even if she's just breathing hot air, people listen to her because she has a track record of success.
She also said, and it's not in this article, but she also said that she anticipates, she doesn't see it being far from 8 to 10% appreciation as well. And those are giant numbers. All
right, if you'd like to have a conversation with our team, we'd love to have a conversation with you and discuss the Arizona real estate market, or any market across the nation, because we are connected and we have a vast sphere across the nation with people that can help you. All you got to do is text the word SHARK to 623-AZ-RECON. That's SHARK to 623-AZ-RECON. And Justin, that was my next point that I was going to bring up. I mean, let's just say we're looking at, a $450,000, $500,000 house, and interest rates are, let's just call it 7.
Yeah.
And I want to wait to drop my interest. I want to wait for interest rates to drop to 5.5%, 6% before I get into the game. I mean, really, at the end of the day, how much money is somebody saving as far as a monthly payment goes by just dropping with a simple percent? And the property that you could get today could be 12, 24 months from now, $50,000 more. And even if you have that lower rate, add another $50,000 to that mortgage.
And you're absolutely right. And we've said it before, but not only are you going to miss out on that appreciation when you could have refinanced and taken that appreciation with you, but in our market right now, it's very common for sellers to give away concessions, paying for your closing costs or paying a portion of your closing costs. They're willing to make corrections to the problems that you find within the inspection. I don't know if we're going to go back to where we were in 2020, where they weren't fixing anything, but it's very likely that it could. I mean, a couple podcasts ago, we were talking about Arizona alone being short 270,000 homes. You turn these interest rates down, and we're already well below where we should have supply here in the valley. Now, granted, I do think that we'll see supply go up a little bit for a short period of time because we'll see some people that are back in the game listing their homes. But I don't think it's going to stick around because how many people have been waiting that didn't own a home to get back in the game that are at that age, they've saved their money in this period of time and they're ready to buy. But I 100% agree with Barbara here. I just feel like if you're waiting, what are you waiting for? Yeah. What are you waiting for? You could secure a home now while the home appreciates, refinance it later on, which is a small cost if you're going with another lender. But with us, we're still giving away those free refinances if you're buying with us. Buy now, refinance later.
You know, Ryan, what's mind-boggling to me is we're still hearing people say, "Well, I'm not confident in the stability of the market, and I'm waiting for home prices to drop." And then I read things like this, and you know, Barbara Corcoran's words. This is for everybody. This is just as important for a first-time, second-time home buyer as it is for an investor, because at the end of the day, you're going to be leaving money on the table waiting for that interest rate to drop 1%.
Sure. I also, for everyone that's listening,
all three of you,
I get it that people always look for facts and statistics that support their own agenda. And of course, being that we're deep into the real estate industry, that's what we invest in, that's what we live, breathe, sleep, and everything. So of course things like this pop out to us, but the reality is that when these interest rates do get that adjustment, because everything goes up and down, right? It's just a pendulum, and so it had to swing this way because there was so much spending going on. And then we look at 2020 and we talk about the real estate market, and already we're not even discussing the impacts of like the PPP that went down and just dumping money into businesses that were spending money that they didn't earn. They just kind of got it as as circumstantial. Now, I'm not hating on it, but what I'm saying is that we're not going. I don't see us dealing with the same inflation that we dealt with in 2020. I see that that the cost of living is probably going to stay right around the same. Gas prices will be the same. Grocery will be about the same. Cost of vehicles will probably be about the same. But people are going to say, all right, I couldn't buy, right? I couldn't because 7%, I was just getting priced out of the market. And then there's going to be a window there, like we're already talking about, where people are going to start charging the market. And we could run into some issues once values start going up from that.
Well, and what I would say is if you think that you're priced out of the market, I talk to people who say they're priced out of the market, and I'm like, you're not priced out of the market. You're looking for your dream home.
They're priced out of their market.
They're priced out of their market.
Yeah.
If you think you're priced out of the market, figure it out. Figure something out. Look for other options, help from family, whatever the case is, because having interest rates drop to 6% is not going to help you. You'll always be priced out of the market at this rate. And
you only have to be good at one of two things, realistically. You either need to be really good at making money, or you need to be really good at managing money. And if you suck at both, then there's never going to be a market for you.
That's true.
My wife, one of my wife's spiritual gifts is spending money. She's got that down a pat.
She does pretty good at making it too, though, buddy.
Yeah, she does. She does. All right. If you'd like some more information to have a conversation with us, do not allow yourself to get priced out of the market. If you think you're priced out of the market, text the word SHARK to 623-AZ-RECON. Let us examine where you're at and provide you with options. Again, text the word SHARK to 623-AZ-RECON. Justin, just to end with you, the other thing that boggles my mind is just not taking the opportunity, at the very least, to have a free consultation with your team. Look at the numbers, look at the credit, take a look at how all of this looks like, and the refinance option. This is what people are not understanding. Take the 7% interest rate before properties go up 10%, and then when interest rates do drop, you have that refinance option.
That's right. And just like Mike was saying, it is free to have that consultation with us. And if anything, it just gives you the education that you can make an educated decision on what you want to do, whether that's waiting or, hey, I'm qualified for a lot more than I was expecting. Let's take a look at some of these homes out there, and you'll be surprised at what you might find. But just like he was saying, take advantage of locking in an interest rate, getting a home, taking advantage of that appreciation that's going to happen, and then look to refinance. And we have that buy now, refinance later, no lender appraisal fees. We can refinance you. Now, let's say it doesn't go to down as low as you expect it. Well, what's the worst that happened? You got yourself into a house before the rates dropped. You were able to take advantage of the lowest point on the interest rates, because I guarantee that's not going to happen if you're going to go and wait until the lowest point to go find a house. You take advantage of the lowest point when you refinance. And even if it doesn't go down as far as you think, well, you got the lowest point at that they offered at that time. Because I don't think that we're going to see interest rates stay, let's just say mid fives for too long, because we just don't have the supply to create more demand with lower rates. Does that make sense?
I think I'm picking up what you're laying down.
Yeah.
All right. Well, we'd love to have the conversation with you. It doesn't matter whether you are a first-time home buyer, second-time home buyer. If you're a second-time home buyer, don't sell your home without talking to us. Or you are a savvy investor. We have somebody on our team, and Justin has people on his team that can walk you through this, give you a free consultation. All you have to do is text the word SHARK to 623-AZ-RECON. That's SHARK to 623-AZ-RECON.